Hi, this is Joe Rabil with Invest Like a Pro. I'm going to be doing a guest spot on the Stock Charts TV this evening at 6 p.m. So please tune in and take a listen. It's a good show. I'm going to spend a few minutes in this video explaining how I use RSI. Most of the videos I talk about are MACD and ADX as a momentum tools. I do use RSI in specific instances and as a supporting indicator. I think it does a really good job of finding divergences and defining them, maybe even better than any other indicator out there. But I use the RSI in a very specific fashion that is pretty unique. I don't think you're going to find it out there very often, at least the way I'm doing it. And so I just thought I thought it was worth explaining. I think if you use it this way, it'll help you define when the trend is starting, and if as long as it stays in place based on these RSI conditions, you know that you have a decent trend in place. So let's get into the first example. I'm actually going to use Apple and Microsoft in these examples today, but they give some pretty good explanation of what I'm trying to do. So as you notice, I still have my 18 and 40 moving averages on the chart. If you want to use a 50 moving average with the RSI conditions I'm looking at, that's absolutely fine. It might even work a little bit better. I personally like using the 18 and 40 simply because a lot of the signals that you'll find with this RSI will coincide with the 18. So let me get into the RSI now. So the red line is the RSI 20. And what I've done is I've actually overlaid the RSI 5 onto the same scale. So I can see two different things taking place. The red line or the RSI 20 is used for the trending conditions. What kind of a trend do I have? Is it an uptrend? Is it a downtrend? Is it a strong trend? All of that can be discerned by looking at this red line or the RSI 20. The gray line is used more as an overbought, oversold oscillator, and it can give us some signs of short-term divergence signs. But I think it helps when you use these two together. All of a sudden, you start to see pretty good opportunities where you're getting pullbacks inside the trend. So I'm just going to start, and what I want to do is I want to explain that if a market has been going down, so let's just talk about this period here where you've been in a downtrend, and what you're looking for is the first time where the red line crosses up above. Actually, both lines will cross up above, and then we'll get a pullback in the gray line, or the 5 RSI will come down under 50. But the RSI 20 does not. It holds 50, or at least it holds the area of the 50. And what I'm going to do here, I'm going to actually zoom in on just the RSI. And I want to show you, so if you notice the red line's down, it actually even failed at the 50 line. This is the 50 line going across. And then it moved down, and then it started to move higher. And if you notice, it rallied up above, and then RSI 5 came down pretty decently underneath the 50 level, but the RSI 20 held right around the 50. And the way I look at it, as long as there's not any real daylight between the red line and the 50 level, then I consider that to be holding the 50 level. So in this instance, you were in a downtrend and then you turned up, and this was a pretty nice reversal signal based on just the RSI alone. If we go back and see where this was actually right at the point where 18 was trying to cross back above the 40 line, but more importantly, it was the first pullback to the rising 18 on a daily chart. So this is a daily chart. So what happens from this point on is, as long as the RSI 20 continues to make new highs in the trend, you will take every pullback where the RSI drops down under 50. And so this was such a strong move out of the gates for Apple, and it's a little unusual to not get more signals. But if you notice, you really didn't get a signal where it dropped down under 50 until here. But it came down close to the 18, and you got this signal down where RSI 20 was well above the 50 level, and RSI 5 came down and got under or oversold. I would say call it neutral under the 50 level. Another signal that I think is very powerful to be on the lookout for when you use an RSI is if the RSI 20 can hold above 50 and the RSI 5 can get down to this oversold region. I've actually got dotted lines at the 30 and the 70 level. And again, this can be used on the short side as well, but I'm just showing you long trades today. And if you notice, we actually got deeply oversold where RSI 5 came down to 30, under 30, but RSI 20 held well above the 50 level. So when I see that, I'm typically pretty aggressive, especially if it's holding right around this moving average level. It'll normally, when you have these conditions, a deep oversold reading on the RSI 5, you're normally going to be testing the 40. And if that line is rising and the 18 is rising, you're usually getting a really good opportunity to be a buyer. So the only other thing I want to point out about this signal, and I'm going to go back a little bit in time just so you can see this. So if you notice, we were in an uptrend back here. Price is moving higher, and then price was making higher high and higher low here right at this point. But if you notice, the RSI started diverging. And what I like to look for is once RSI 20 gets above the 70 level, start looking for divergences in the price to the RSI. And when you get that, you want to start being a lot more defensive about any new buying. I wouldn't be looking to play pullbacks in that. I would be expecting a bigger consolidation, a more complex correction, something like that. And sometimes it'll just come back to the 40 or the 50 and try and hold and turn from there. And other times it'll actually reverse and break down. And if you notice what took place after this divergence, it actually broke through the moving average. And again, right here, we actually got one of the sell signals. So if I go back and just show you what took place here, RSI 20 broke well below the 50 level. And then when it rallied back, RSI 5 got over 50. RSI 20 could not get over 50. And that was a sell signal. So if we go and look at what price was doing, it was actually the first rally in that bear market, and it led to a really nice signal to the downside. If you notice what happened, though, when price went to new lows, the 20 RSI started diverging here. And so you would have been on the lookout for some type of reversal based on the fact that RSI was not confirming to the downside. So I thought Apple was a real good example of several different trades that took place over the course of the last year, basically. But it gives, I think, a pretty good explanation of how I use the RSI. If you notice, Microsoft actually gave a number of signals. So it had the same reversal pattern where RSI 20 got above and RSI 5 pulled back, but the RSI 20 held 50, and it held 50 all throughout, and it really hasn't broken this whole time. It's still staying above the 50 level throughout, but there have been several times where you've gotten pullbacks along the way, and you really haven't exceeded the 70 level yet. So until that 70 level is exceeded, let me make sure this is brought up to date. Yeah, so this is brought up to date. So we don't have a 70 reading yet in the RSI 20. Once that starts to happen, then you want to start to get a little bit more defensive. The only other thing I'd point out is that you got to be really careful about doing any buying when the RSI 5 is up in this 80 to 90 region. Look at that and make sure you're avoiding doing any kind of buying when this thing is very excessively overbought. I'm going to switch this to a weekly chart. I want to zero in on this period back at the beginning of 2019 because I want to bring up another point. So once price is coming down and there is a break of the moving averages, and if you notice, there was daylight. So if I look at this and expand this out, notice how the RSI 20 overran the 50 level, and there was daylight here. Once I see that, I'm now waiting for the first time where price gets back above or around the moving averages, RSI 20 gets back above and holds, which would have been this level right here. So I'm not trying to pick a bottom when it gets deeply oversold. I'm waiting for basically the first higher low after that happens. So if it overruns to the downside, you want to wait for it to get back above and make its first higher pivot low at this point, which would have been confirmed on this close of this bar right here. And that was sort of the signal that this was getting ready to go back up and going again. So I hope this makes sense. I think if you study this video, and I'm telling you, it might be worth watching again just to make sure you understand it, because it's a simple concept. But once it gets ingrained in your head, I think you can go and look for these patterns and notice when you're getting excessive price movement in terms of short-term pullbacks, but the trend is staying to the upside. So make sure you hit that like button, and if you're not a subscriber, hit the subscribe button and hit the bell to get the notifications. All right, thank you.